news. We have Ed Yardeni, President at Yardeni Research, joining us. Ed, great to have you with us here. Thanks very much and congratulations. We got the benchmark S&P at record highs as of yesterday. So it's looking good. And I think, if I remember correctly, you got a decent upside levels from here. When we spoke with you at the beginning of the year, end of last year, you just want to sort of run us through that again?
Yeah, I'm looking for the S&P 500 to get up to 5,400 by the end of the year and 6,000 next year. So I think we're in a bull market. I've thought that since October 2022.
We are in the US markets definitely is in a bull market with the way the markets are moving. Even back here in India, actually, Ed, it's been pretty solid. We've had a couple of volatile phases, but now we're heading into big events like the election. There's the budget as well, the vote on account. How do you see the Indian market shape up?
Well, I think in the global competition for global investors, India's been doing extremely well. And I think part of that is because India is a successful economy. It's an economy that has a lot of relatively young workers. And it's an economy that has a lot of upside potential. I mean, there's still a lot of work to be done, for example, with the infrastructure. But compared to China is really what's going on here. A lot of investors are not going back into China, even though China's gotten cheaper and cheaper. And as India's market's gone up, China's market's gone down, which I think signals that investors believe that the property bubble that's burst in China is going to continue to depress that economy, and that their underlying demographics of aging population is another negative. So India is kind of winning the race here in terms of emerging markets in global portfolios.
Well, indeed. Morning, Ed. Good to see you. And, one would say we're expensive, but going by the points that you put down so beautifully, well, we're expensive for a reason, because, the demographics of the earnings growth as well to look ahead. Ed, the last time we chatted, you gave us your view in terms of rate cuts, and you said you're expecting something only in the second half of the year. So that's one cue, and we've got your view on that. But what about the U.S. presidential elections? It appears, as of now at least, that maybe the Republicans could be in with a good chance. How do you see that panning out and its impact on the stock markets?
Well, you never can tell with politics. You never can tell with whether the Democrats or the Republicans are going to have the White House. Right now, it looks like it's going to be the same old horses in the old race, and that's Trump and Biden. And both of them are very controversial figures. They're very partisan. Half of the people like them, and one candidate, and half dislike the other one. So, it's kind of a 50-50 mix here in terms of partisanship. It's been my observation that the U.S. economy and stock market have been doing remarkably well for the past few years, despite Washington. That's my attitude towards Washington, is that it's really only an obstacle for doing business, but somehow or other, Americans managed to do a good job of keeping the economy moving forward. So I'm pleased about that. With regards to interest rates, I haven't been expecting a big drop in the federal funds rate. I think the economy is going to remain very, very strong.
Ed, I would argue, and I don't know if you agree with that, is that you said that despite politics, right, markets have been doing well, but actually you can sort of argue the other side as well, which is that it doesn't matter Republicans or Democrats, left or right or whatever. One thing everyone has understood is that you've got to keep the markets happy. Markets got to be up. And that's an important kind of a signal, which is important for the real economy, et cetera, et cetera. You'd agree with that, Ed?
Well, I think at the end of the day, politics doesn't matter as much as the fundamentals of the economy. And the fundamentals of the economy are certainly influenced by fiscal and monetary policy, but they are mostly driven by the corporate sector, the business sector, and workers, and that they continue to produce better and better economic growth, record highs in real GDP, economy growing better than expected. And guess what? No recession. No recession in 2022, 2023. I don't think we're going to have one in 2024.
Yep.
Okay, well, that is a strong statement and a very ambitious one at that. No recession in 2024 either, after what we've seen in 2022 and 2023. Hope that plays out, for the benefit of the bulls at least. Let's thank you on that note, Ed. Have a good weekend, and thanks for joining us on a Saturday. Let's